Gold IRA tax rules. When it comes to gold IRA tax rules, there are a few important things to know. First, you need to know whether or not you can take early withdrawal penalties. If you do so, know how long you're going to keep gold in your IRA. After all, there are limits on the amount you can contribute and deduct, and you should know these limits. After you know the rules, you can get started maximizing the profits from your IRA. Taxes on gold IRA distributions. If you have a gold IRA, you should be aware of the tax consequences. If you're over 72, you must start taking mandatory distributions from your account. If you don't, you can face a 50% tax penalty on your gold. You should contact a gold dealer or precious metals broker to learn more. IRA accounts are held in a bank or precious metal broker. Taxes on gold IRA distributions are calculated based on the fair market value of the metals. While taxes on gold IRA distributions are often overlooked, they are very important to consider for investors. Although they are inevitable, annual returns can help you maximize your after-tax return. The tax benefits of gold can make gold marketable for a lot of investors. While you're planning this investment strategy, don't forget to consider taxes. A gold IRA is an excellent option for you. Some of these tips are going to be very helpful for you, and I look forward to sharing them with you. While traditional gold IRAs are tax deferred, the gains that occur from these sales are still subject to taxes. These taxes can be applied and are applied once you withdraw the funds from your gold IRA. However, you may be eligible for a tax deduction if you contribute to your gold IRA. Even if you're a high income taxpayer, you may be charged more than 28% collectible rates of tax. These rates are different from everyone, so it's worth consulting with your tax advisor before withdrawing funds. When you take out gold from your gold IRA, you must be sure that you are having a metal purchasing that is 99.9% pure. Otherwise, you risk losing your IRA status. The only exception to this rule are nuance gold coins and platinum bars. If you don't follow these rules, you could lose tax deductible status of your gold IRA. And don't forget that your traditional IRA contributions are tax deductible. Early withdrawal penalties. IRA owners have 10% early withdrawal penalties if they start their mandatory distributions before they reach the age of 70 and a half years old. There are many exceptions to this rule. However, one exception is if a person becomes hospitalized or becomes unemployed. Another exception is if the person engages in substantially equal periodic payments of the same amount of gold or other precious metal. The IRS will still levy an early withdrawal penalty, though, so keep that in mind. Although gold is relatively a safe investment, it's important to understand the risk associated with this asset. Although gold will always have some value, it does fluctuate and therefore it's not risk-free. The price of gold can also drop or rise and physical assets can be stolen. While most custodians ensure that their assets are protected, theft can happen. In addition, early withdrawal penalties can make gold IRAs unattractive to investors. To avoid paying an early withdrawal penalty, consider using an IRA with a gold component. These plans may allow you to buy physical gold and sell it later. You can use that cash for emergencies or pass it to your heirs. The early withdrawal penalties for gold IRAs are generally 10%, but certain situations qualify exemptions. Disabled Americans or even individuals, first-time home owners, also annual payments will not have to pay an early withdrawal penalty. Another exception to the early withdrawal penalty for gold IRAs is when you need to withdraw funds before reaching 59 and a half years old. If you want to use money right away, however, you need to consult a tax advisor. If you do so, you will likely owe income taxes on the funds. In addition, early withdrawals will trigger an additional 10% if you are under the age of 59 and a half years old. This is an important factor when making a withdrawal decision. Storing up metals in IRAs. If you're planning to hold precious metals in IRAs, you should know that there are tax implications in the practice. The IRS prohibits individuals from acting as their trustees on their own retirement accounts, so storing precious metals under your mattress is out of the question. Similarly, you can't store precious metals in a self-storage facility since it would be considered a distribution. Depending on the metals you plan to hold, you'll need to store them in accordance with the IRA rules. Most IRAs require metals to be stored with a bank. Broker-dealers and third-party administrators cannot store precious metals owned by IRAs. Similarly, IRA-owned LLCs must follow the same rules for storage. The custodian should be aware of the storage rules before recommending a custodian. Another benefit of precious metals is that they are a safe asset. While you're not likely to face bankruptcy, your gold IRAs can protect your investments from high inflation and market volatility. By keeping your metals in an IRA, you can avoid the fees and storage costs that come with storing precious metals in a bank. If you're planning to buy gold or silver coins in your IRA, make sure you consult an IRA account executive for additional details. You can also request a free precious metals information kit from them. Another issue to consider when storing your precious metals in an IRA is whether you can store them at home. In the case of Donna McNulton, she opened a separate bank account in the name of the LLC and documented the purchase of the coins. She then labeled them as property of her IRA-owned LLC and stored the coins in an at-home safe. Keeping precious metals at home is against IRS rules. Contribution limits. Traditional gold IRAs are tax-deferred retirement saving accounts. Contributions to these accounts are tax-deferred, while the gains are not. The IRS has set contribution limits of $5,500 for individuals under age 50 and $6,500 for those over the age of 50. Unlike pre-tax IRA contributions to traditional gold IRAs, they are deductible for taxes. However, you must pay taxes on any distribution during your retirement. To take advantage of these tax perks, you need to purchase gold through a reputable custodian. Your custodian must be an IRS endorsed depository. The custodian will keep your gold at a secure location as long as you hold the account. The IRS does not permit you to store the precious metals in your own home. However, you can sell or deliver the gold to your beneficiaries upon reaching retirement age. However, you cannot take possession of your gold assets unless you reach this age. Individuals with modified AGI below 125,000, they are going to be modified with AGIs over 140,000, and they may have a partial deduction. If you are married filing separately, you may not take any deduction. This rule is not a hardship, but it is important to keep in mind and read the fine print. This way, you will have the best chance of maximizing your gold IRA tax benefits. So invest your money wisely and enjoy the tax benefits. There are also contribution limits for gold IRAs. In 2019, the contributions limit for individuals under the age of 50 was increased to $7,000, and for individuals over the age of 50, the limit is now $6,000 for both men and women. You may also establish a self-directed IRA and include physical gold in your portfolio. In this way, you can diversify your portfolio with boosting your returns. With this tax-favored retirement investment, you can add physical gold to your portfolio without fearing any negative impact on your portfolio. Rollover options. If you've already accumulated some savings in a traditional IRA, you may be interested in a gold IRA rollover. This option is available to any kind of IRA, including Roth, SEP, and inherited accounts. Tax rules apply to all types of IRAs, and the growth of IRA funds is tax deferred. Investing in gold is a great way to diversify your retirement savings. Indirect rollovers are another option. These rollovers are less attractive, and direct rollovers are a little bit different since the plan administers liquidates your holdings and sends you a check. Then they withhold 20% or more of the money to taxes, which they send to the IRS. After you deposit the full amount of the rollover, the administrator returns the extra 20% to you. This option isn't as popular as a direct rollover, but it's a convenient alternative for those with gold IRAs. There are many benefits to rolling over a gold IRA. The tax rules for the transaction are straightforward. While you can withdraw money from a tax-deferred account, you have to pay income tax and an exercise if you are under 59 and a half years old. The rollover of gold IRAs is tax-free as long as you complete the transaction within 60 days. However, you have to pay taxes on the amount you withdraw after 60 days. Another advantage to gold IRAs is that you can include physical assets to your retirement portfolio. Traditional IRAs can only hold stocks, bonds, or stocks, but the Taxpayer Relief Act of 1997 broadened IRA investments. Precious metals can be included in a gold IRA. Self-directed gold IRAs are also called alternative asset IRAs, but usually are only gold. So I hope this video has been helpful. I hope it's helped you understand how gold IRAs work. Please like, subscribe, and hit the notification bell, and we will be back with more information for you very soon.